Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Monday morning. Found something to do away from the screens over the weekend, hopefully. It's time to kick off what will be a shortened week, but certainly not without a lot of potential fireworks. There are a number of FOMC members speaking today, 2 of them while the markets are open, 2 of them after the market closed. I believe we're scheduled to hear from the president once or twice today. We have the Bank of Canada on Wednesday. We have ECB on Thursday. We're going to hear from Powell on Wednesday. And then Thursday is OpEx. And of course, we have the bank holiday on Friday with Good Friday. A lot's going to be packed into just 4 trading sessions. And all of that is happening with an overall downtrend still in place, even after the rally on the 9th. This is still very much a downtrend in the broader averages. Now, if we trust trends, which I do, I trust uptrends a little bit more than I trust downtrends. But nonetheless, if we have a trend and I trust them, in this case, where is the resistance? And can I time that resistance with different events that are on the schedule? So for example, let's take a look at the ES today. If I were formulating a plan for a longer term swing trade, I would start that conversation with resistance potentially at 55.12 and again at 55.30. That would be 2 price-based levels of resistance. And then I would get into the mean reversion that can extend as high as 5,700 and is about as low as those Darvis levels. So the bottom line is this. There are a lot of levels oftentimes that we will expect some kind of reaction to. In this case, I'm looking for levels that will have a reaction of selling pressure. If we can ideally identify these ahead of time and then look at the different events that will correspond with reaching those levels. So we know that any of those events I just talked about could send the price action higher or lower. So in this case, movement higher would be useful, and then useful would be defined by what level are we at? And then do I have a setup there? So if you kind of look at it at different layers of what a trade setup would be, now I know directionally where my bias is on, say, a daily time frame. And then I'll look to the next thing, which is, okay, what levels could I look for a reaction to? And then a reaction is pretty much synonymous with a setup. Is there a setup there? Price alone is not a setup necessarily for me. It's going to be price plus whatever other set of criteria that I'm looking for. That's the setup part. And whether it's the ES or whether it's the NQ, we could talk about similar conversations. Darvis level resistance, mean reversion. And I'm only going to look for mean reversions like this within the context of a trend. I will not look for mean reversions. And for me, that's a zone in a non-trending environment, not because they can't happen, but again, we go back to probability, and the probability of those levels holding is far lower. I'll give you an example of, kind of an outlandish looking mean reversion, but exactly what I'm talking about. So here's the daily time frame of gold. Since frankly, the middle of January, there have been a number of mean reversions that have happened in a general bullish or general trend. And you can see the one that happened at the end of February. You can see the one that happened most recently in the beginning of April. Those are trends where the mean reversion lines, the green, the yellow, and the red lines are lit up because they're valid due to the trend. And, ultimately, I want to be able to, and I'm going to show you something else we do with the wave. So one of the things that I do is I automate this zone. So I'm going to show you another way to keep from getting into trouble with mean reversions. All right, if there's no mean reversion to be distracted by, so here on the 28th, there's a mean reversion. The lines are there. After that, they're not. I can rely on other tools. That's a great daily price movement range support level there. Here you have the trend. That's the 2 rows of colors down here. And you have the mean reversions lines lit up. So this is where I always like to recommend to traders If you have a process, and I'm presuming if you're watching this show, you're in search of a process or you're developing your own, either way, cool. The more you can say, I can hand this idea over to a programmer, and the programmer can take the ideas, the criteria, the settings of what you're doing and automate it. Now you're on to what can be scalable, repeatable, high probability trading. So that's what I do, right? I have a set of ideas. I formulate that on my own. What am I looking for? What are the things that I want to measure? How do I want to measure them? And then can I automate them? And if I can do that, and that's what I'll say, if anyone out there is saying, Rog, yeah, I'm definitely looking at this process of being able to automate what I'm doing. Fantastic. Even if you're not, put that as a criteria for just the ultimate level of what you're looking to do as a trader. Because if you can automate it, if you have a model, right? If you have a model, then you know that it had criteria. Because it has criteria, you've tested it, and now you can automate it. And that's really what this stage of, my career, and if I can shortcut some of the discretionary, less model-driven years of my trader, I can shortcut you away from that and go, you know what? How do I speed up to, I want to be a process-driven and automate as much as I can type of trader. Start there. Don't do what I did and spend a lot of years trying to get there. Just start there and it'll make life a whole lot easier. Okay, so first question this morning is Fresh Fred. All right, AVGO and Goldman Sachs, so two very different sectors. AVGO would largely be considered the semiconductors, SMH, Goldman Sachs, XLF. Heads up on things like Goldman because we're going into earnings. So Goldman earnings are that's today, right? Before the bell. So I'm not going to do anything with something like Goldman. So Fred, anytime we have earnings in a stock, the day or two later, I'm cool with looking at it, but day of, I won't. So AVGO, let's take a look at what we've got here on AVGO. And again, we've got to start looking out for all those pesky earnings releases. I say pesky because they are a pain in the neck. It's really unnecessary amounts of volatility due to a very specific thing for a very short period of time. Earnings are not what ultimately move a stock. It really isn't. It adds a lot of volatility to a stock, but trends are seldom created because of earnings, but they can be broken because of earnings. So let's take a look at AVGO, see what we've got. All right, number one, start at the bottom of the chart, and structure dictates strategy. Strategy dictates whatever kind of indicators I'm going to be looking for. So the most important thing is, what is the structure of the daily time frame of AVGO? So it's a downtrend. All right, cool. So now I know what I'm working with. I've got a downtrend, and that means that I'm looking for setups that are focused on resistance. And then once price gets that resistance level, I would look for it to get rejected, right? Okay. Sounds so harsh, right? All right. What have we already seen? Well, you can see here, resistance, right? So far, rejected. It's not able to really continue to climb above it. This is a mean reversion. The green, the yellow, and the red lines, you can see, that's the mean reversion. And this would be where I would look largely for potential weakness from this area. Now, based upon the fact that we have been rejected and then went all the way down to 166, it's a pretty good argument that we've already made an initial move like that. I'm probably not going to. Now, let me show you a couple of things that I'll do to separate, say, an ideal downtrend from one where I'm going to be a little bit more hesitant. And it has to do with the color of the candles. So when I take a look at these candle colors, if I'm looking for high probability, the candles are still red, not yellow. Yellow is a more neutral price action and neutral participation. So while this is absolutely fine, if I want to be, I don't want to say nitpicking, if I'm looking for more of the criteria that leads me to a higher probability follow through, those candles would be red, not yellow. So if I can find something in the semiconductors, let's do this here real quick. If I can go to semiconductors, let's open up that group. And I can find something that's consistently red in that group on the daily time frame, since we're talking about dailies. I would say Taiwan Semi would be something a little bit more interesting to me. Qualcomm would be more interesting to me. Micron, LRCX, ADI, anything with the consistency of the red candles, even Intel, which was one of the stronger stocks in this group for a while. So if I can find a downtrend and the consistency of the red candles, and what's consistency? I define that by 5 candles in a row. Everything, again, let's go back to models, right? So would this be a reasonable setup for a move to the downside? Yes, but would it be the best in this group? Probably not. So I would focus possibly on Taiwan Semi or Qualcomm, downtrend and the red candles. And that's I think a lot of what we need to remember when we're traders. So rather than starting with, is there a setup on AVGO, part of my process and what we talk about so often in the mastery is, okay, cool idea. Is something potentially going to do the same thing that I would look for to happen in AVGO, but might be looking as a potentially better setup? And it may or it may not. Taiwan Semi, this is Tyson, TYSM, there we go. Taiwan Semi would potentially be a better example. Knowing that we never can know the future, we play probabilities. That's the way I would look at it. All right, thanks, Fresh Red. Next up, Ren asks, do the prop dots work on hourly timeframes? Yes, the prop dots are really sort of in the foundation of the prop dots is going back to sort of the old school moving average crosses. I didn't like looking at the 2 little lines intersecting, and it's very noisy if you look at moving average crosses. It's terribly delayed as well. So what I did is say, look, I really like moving average crosses. I'm an old school trader. There's a reason people still talk about moving average crosses 40, 50 years later. I remember books that were written in the 80s and frankly in the early 70s that talk about moving average crosses. It's classic. It's time tested. But it's noisy. It's visually very noisy. And maybe because, my eyesight's terrible. But what I wanted to do is take that idea and distill it to a signal. Right? That's all we're all looking for those, right? What's the signal of resistance or a sign or a visual cue for resistance? So yeah, any time frame where you can put moving averages on there, Ren, you can put the propulsion dots or the top tier dots, which is the evolution, the improvement of the original idea. Yes, you can put them on any time frame. Dave says, did we have a pit bull low last Wednesday? Well, we're only going to know if it holds, right? I don't look at pit bull lows specifically on Wednesday. So for those of you that are unfamiliar with the terminology, pit bull lows are named after a trader, which probably is my favorite interview from the Market Wizards. I like his book, Pitbull, as well. His name is Marty Schwartz, and they called him the Pitbull. So it's a nickname from this trader. And he noted that the week before options expiration, typically that Wednesday, is when there's usually a low going into options expiration, but that's more in line with a seasonal. So while it could happen, I don't look at it as it will. But that said, last Wednesday what was last Wednesday? The 9th? Was Wednesday the 9th? So here's the thing. I mean, yeah, that would be technically Wednesday the 9th. We could say that's a pit bull low. And then the idea is, I look for those lows to happen either Wednesday through Friday. And the idea is we typically rally into at least a Monday or Tuesday of options expiration. I don't use that as a setup as often anymore. And I only say that not because it's not a cool setup, Dave, but because I know there's that inclination or that tendency to put in that low. And then now I want to remember is that's sort of in the background. And then I'll see, hey, is there a setup? Now, a pit bull low and a downtrend, I'm not going to say is usually high probability. A pit bull low in an uptrend, a pit bull low in a neutral environment. So I don't think we can ever take the tendency of the seasonal out of the context of the trend. So I'm less likely to look for pit bull lows. And let's face it, is this a pit bull low or a completely unforeseen post? We know it's the latter, but I'm going to be less inclined to view that as a high probability setup in a downtrend. It very well could be, but it's a downtrend. I think that to me is that overarching narrative, right? The downtrend. All right, let's see here. Next up is Fred asks, I asked about these two largely because of the stock buybacks. Wasn't sure from your experience if these actions would change structure. So here's the thing, Fresh Fred, this is how we will look at anything. Are the buybacks a secret? Nothing ever is. We're retail traders. I think we have to know that we are never going to be the exclusive holders of certain knowledge. Somebody else already knows. Somebody else has already priced that in. So if we're talking about buybacks, it's priced in, right? So can an event change the structure of a market? The most common type of change that any kind of event can lend itself to would be breaking structure. So for example, one day, one session, one bit of news has the ability to break structure, or at least begin to break structure, but it can't make structure. So we could have a downtrend go into possible early stages of chop, but the trend is never going to be formed because of earnings, stock buybacks. Early signs could be that. And I think the larger presumption is, if it's something that I know, if it's something that we're talking about, largely the best, healthiest, most effective assumption is it's already priced in. So if it hasn't made a significant change to the structure now, it's probably not going to, unless that assumption was wrong. It wasn't optimistic enough, or it was too optimistic. So no, the only trade on news, the only trade on headlines that really retail traders have is if the news was wrong, not if it was right, because it's priced in as right. And the movement will come if it wasn't priced in accurately. And that means it was either too optimistic or, not optimistic enough. So thanks for the question. All right, next up is Walmart for a swing. Sure. All right, so Walmart is part of the staples. Staples are typically a defensive. Walmart this week, some of the better swings might be on the 1 hour, because Walmart has really punched up to higher highs and higher lows for easily 3 sessions. And even though the 8th was a down session, it still punched up to a higher high and a higher low despite the lower close. So really, you're talking about 5 days of higher highs and higher lows. Not enough for a trend, not enough even for me to call the daily time frame of Walmart bullish, but that movement has affected the 1 hour in such a way that it has been reflecting some bullish action. And if it is, then I can look for opportunities to get Walmart. So I would say short-term swing on Walmart, if anything. I would focus on that short-term swing. And I love the idea of looking at staples. So I'm with you there. If we take a look at the XLP. Oh, sorry, gang. Yo. Okay. I know. Hang on, gang. Sorry. My pool guy's here. Sit. I know you're protecting mommy. I know. So if I'm looking at XLP, there's your Walmart. Now, not a lot in XLP looks great on the daily time frame. So that's where I'll say, if there are other time frames, Walmart, Coke, we're long Coke in the mastery, Keurig, maybe Kroger, maybe Mondelez, right? If we can see some of these higher highs and higher lows, maybe not for daily time frame buys, because I'm not allowed to do them really yet on any of these. But if we can get a 1 hour clarity, that would give us a great short-term swing trade. And that probably works out really well because of everything that's scheduled to happen towards the end of this week. Powell on Wednesday, ECB on Thursday, Bank of Canada on Wednesday, and then, of course, OPEX on Thursday on this shortened week. All right, gang, as always, I'll be back tomorrow, same time and same station for Charts and Coffee, 9 to 9:20. If you have any questions, get them in early. We'll go through them. So thanks as always for joining. I'll see you tomorrow. Be good to each other.